Yes. So what I've got here is a trade. It's not a trade analysis. It's a trade idea analysis / case study. Wasn't still probably not going to take this, as will be clear, but it is a short on it's an unusual context short on EURUSD. So if we start on the DXY rejection, I expected to trade into this overlapping defense. NFP was this week, that's the big wick. And NFP, we finally started to reverse upwards. And honestly, not the best for the dollar, because there's no clear direction, because you've got this basically, this SIBI, an overlapping defense versus this discount array and this swing low. And this is all just so far a 50-50 area, and then even after this, you still got this overlapping defense really, which I'd still want to get out of that before I can say, okay, we're gonna continue onwards, or I would like to start running this low to say we're going to continue downwards. So for now, it's DXY consolidation, which is obviously not great. I'll just do all of the DXY first. But on the daily, for now, for short-term bias, on the daily, after hitting this weekly fair value gap, bearish fair value gap, we create this daily, and it fails to the 2 candle rejection here. Fails. This should have been followed up by a down candle if it was to follow through, and it's not followed through. Kind of unsurprising, as you're in a consolidation area, and it's got this big up candle. So what I was looking at as on the 4 hour, we are hopefully, or this ends in half an hour, we would have made a 4 hour fair value gap coming straight into this daily, and then as well as the daily, you also had this order block. Not sure if is that the same on the daily? Yeah, roughly. But you had the overlapping defense right on the edge of this fair value gap, which we've now come into, and just seeing how do we reject off of that, what's our reaction, whether we're going to close through it or we're going to close a fair value gap downwards. Not sure yet, so just waiting on this because I was originally thinking, oh, this is going to be a breaker when it was up here. Could I look to get in on the hourly? But no, I'll be waiting, because I mean there's no resistance now. And so with the hourly, if I'd got the confirmation, then maybe I would have, but or maybe it would have been a more likely sort of trade to get in on the breaker. But anyway, that's not happened. So just looking to see what this does, and then switch over onto EURUSD. The unusual context, start off on the weekly, same as DXY. You had made this massive sweep of this high, massive 2 candle rejection, and subsequently you've hit your draw on liquidity and you've left behind this big breakaway gap. Therefore, if a breakaway gap is now not creating any more fair value gaps, you can then look somewhere within here for unusual context, and where you are creating fair value gaps downwards, with this breakaway gap being the target drawn liquidity. But you also now have this previous week low and previous day low just before that. But yeah, you're targeting here. So on the daily, we've also got rid of this overlapping defense. So we've got no resistance area on the daily, which is nice. And Now on the 4 hour, looking to target this low. And that would be, once this 4 hour fair value gap's confirmed, that would simply be short-term low, short-term high to short-term low, which is quite nice. But on the hourly, the market structure isn't quite as I mean, it's not that great on the 4 hour, but this is an intermediate term low on the hourly. Yeah, this is, I mean, it is an intermediate term high because it's got 1, 2, but it's one of those ones where you've not confirmed the order flow, i.e. you've just dropped, you've not retraced at all, so you've only maybe going to have one fair value gap here, which you've retraced into to continue. That being said, you are very near this drawn liquidity, and there is now no resistance up to the high time frames to reverse off of. And so to sum it up, the key arguments you've got are that the cons, if you will, the DXY is in this 50-50 area on the weekly, so no clear direction on the DXY, but I mean sometimes that's going to be the case. So if you drop down onto the daily, you have some potential unusual context, but it's worth bearing in mind that this is a daily SIBI, and you're coming towards the end of the session. You have no news today. You're just trading off the back of NFP volatility from last Friday, and it's now Monday. But you've got a daily versus 1 4 hour. And that's not great already, because obviously you like it the other way around, like a 4 hour versus daily, if you're trading off the daily. But as well as that, the fact that it's unusual context and you're in a consolidation on top of that, that also lowers the probability and it lowers the effectiveness and your ability to say, hey, I just need one 4 hour fair value gap, disrespecting this daily, right, to reach here. And then on top of that, I mean, I'm pretty sure it's the same on the hourly, on the DXY, yeah, right? On the hourly, you've not confirmed order flow to hit this intermediate term high on the 1 hour, because this might only be one retrace and then go, but you never know. We could go on to do it. It could become a decent trade, but as of now, you've not got the right sort of market structure on top of the consolidation and just a 4 hour versus a daily. But the big pro is, on both graphs, you're in this area of no resistance and you're very near this draw on liquidity. And that that is really the only pro here, right? Because you're trading unusual context, so you're not going with the flow of things. The only pro is that it is no resistance area. So if you were to get the right confirmation, so I think now I'm looking over it, I think on DXY, if I could get a retrace into this 4 hour and 15-minute ST plus RE, then I would probably be happy. Oh, I really should be doing this on EURUSD. Yeah, a retrace into here and 15-minute ST plus RE, and then probably you'd really just be targeting here. then maybe I could justify it. Or 4 hour and then a 1 hour out of the 4 hour. But then you've got to bear in mind that we are coming to the end of this session, Forex session, kill zone, whatever you'd like to call it. It's gonna end at 10, right? So you've got 2 from 2. There's New York time, 2 a.m. to 10 a.m. And that's for London session of it. So with that, the session would be ending as you've kind of got your confirmations. So again, that's not the best. It's not the worst, but it just adds to more arguments why you might just start to consolidate a bit. I'm not saying I'd expect a full kind of reversal, but you might consolidate, and I don't want to be in a trade that consolidates. I want to be in a trade that's going somewhere. So I think I'll probably leave this trade, unless I do sort of get the right confirmation, then I might take it. But yeah, that was the idea, and that's the sort of way up of the arguments. I have to see what happens. This is now, as I've sort of watched this over the past 2 hours, this has a decent rejection off this edge of the fair value gap is the overlapping defense. But you get it from that a bit clearer. Decent rejection off that. So now I'll see if we can get the proper confirmation. Yeah, maybe I'll take it. But if not, I will leave it, and I'll probably, tomorrow, Tuesday, Wednesday CPI, it will probably be waiting for the later stages of the week to take maybe something similar, and we'll see if DXY shows its hand. Yeah, but that's it. That's the little case study / idea. And yeah, that's that.